Hi, this is Paul from globaltradingsoftware.com, and this is a tutorial using our opening ranges indicator suite with the divergence cloud and the EMA cloud to manage those. First of all, this is the ThinkorSwim version. We haven't got it for many versions, but this is gold on the 5 minute. Now we use gold on the 5 minute, currencies futures on the 10 minute, and indexes on the 15 minute, and we're looking for those opening ranges, and we can adjust the times of those ranges depending on where you are. I'm based in Europe. We do have the European gold pit open here at 8 AM, and we can see it's labeled Europe, and we can see the range of that first 5 minute candle, and we are looking for a long or a short breaking that range. But also we use the divergence cloud to give us confirmation of direction. Okay, so in this case here we've got the European open, then we've got the London Stock Exchange opening range here again, but we've got no divergence cloud. But then you can see the divergence cloud start to form. We get the big red arrow pointing down. The divergence cloud's getting stronger to the downside, so we'd go short, breaking the range of this European gold pit open just here, 1900.7. Then all we use then is the EMA cloud to manage the trade. See how it comes up to test, comes back down again, comes back to test, comes down again. Then we get the New York gold pit open. So we can then say to ourselves, right, okay, we've got the New York gold pit open, we're already in this trade. Is there a call to actually add to this trade? At this point here, the divergence cloud has disappeared, but we're still in that original trade, so that's fine. If you're not in the European pit open, we are looking then for a breakout outside of this New York gold pit open. We'd use the divergence cloud for confirmation, which we get here, so it's a little late. But then we get the New York Stock Exchange open, and then we've got the divergence cloud, and as you can see then, once we break down below here, after the New York pit opening range, we then go down, test the EMA cloud, down and down and down and down, and all the way to the close. The close is at 1877. Remember, on the European gold pit open trade, we went in at 1900. So that's 23 points, 230 ticks for the day. These are fantastic. I mean, you're talking about half of that for the New York gold pit open there. But the main thing is we are looking for those opens. We are looking for European gold pit open, fantastic for trading gold this. We're looking for then the London Stock Exchange open, but then we've got the divergence cloud confirmation for our entry. That gives us a direction, if you like. The divergences are in a bearish state. We get the big red arrow pointing down on this candle here. So we've got the confirmation that we're going to break out of this European gold pit open to the downside. We're going to go short at 1900, and then we use the EMA cloud to manage the trade. This is set at 34. You can change you can adjust the settings, and we then look for a close above the EMA cloud, which it doesn't do all day until right on the close. Now we move into today on Monday. We see the European gold pit open here, and we have had the divergence cloud confirmation here, and then we've had the London Stock Exchange open very recently here as well. So we are looking now for a short. So the short simply will be, if you're not in on the European gold pit open here, we're probably looking now, we've had this London Stock Exchange open, going short on around about 1860 or 1859.9, below the low of this candle before the London Stock Exchange open. So there's two potential trades here. If you're not up early enough to trade the European gold pit open with that confirmation, we have now had the London Stock Exchange open. The confirmation is there. It's a bearish bias, if you like. We've got the divergence cloud, and sensibly our entry would be at 1859.9. Stop just above the London pit open, or in fact the high of the London Stock Exchange open, or in fact just above the EMA cloud there, and again we don't know what's going to happen for the rest of the day, but if Friday's anything to go by, that was a great looking trade. So something different. I will now go and adjust the charts and look at currency type opens on a different time frame. Okay, so this is 60 euro futures. On the 10-minute chart we use for currency futures. So 10-minute chart, 60 euro futures. We've got the European gold pit open there again. And why do I use that? Because that's very, very important. Lots of European traders start to come on and sort of build up some momentum there. So 10-minute chart, European open. Remember, we're looking for divergence cloud confirmation. So we try to push up out of that range. Then we get the London Stock Exchange opening range in blue here. You can change all those colors. Then we have this down arrow here for the divergence cloud on this. So this would be our entry around 1.21961, below the low of this particular candle, because that's our divergence cloud start, this red arrow. And as you can see, then we went back up to test the EMA cloud. Then we finally came through and we broken through this entry and all the way down. These are the previous days New York gold pit and indexes open here. We push through those, then we go to New York gold here. We push up, but we're pushing up into this divergence cloud, so we're not looking for a long there. We're still on that short trade from here. This is last Friday, same as the gold. And then we get the New York Stock Exchange open, and then we can add to our, when we break down below this opening range, add to our short here. And then we pretty much go into the European evening and we go pretty flat. Start to come up here, see how the divergence cloud turns green, and we start to get above that EMA cloud. That's when to get out. So again, very, very simple. I've used gold and the currency futures so far on this opening range. So gold was the 5-minute. Currency futures is the 10-minute chart. Again, these automatically change these opening ranges, identifies the opening range candle and plots the opening range, because future price action sometimes comes to test this opening range and comes back down again, for example. So it continues to plot those opening ranges for you to help you. So let's have a look at index futures. So this is YM, the E-mini Dow Jones futures, and this is Friday, the same. Now, some European traders do trade these futures, but they are quite slow. But this is the European Open, the Gold Pit Open, and again the London Stock Exchange Open, and we print those ranges over a 15-minute time frame this time for these opening ranges. This is what we suggest. So with the European Open and the London Stock Exchange Open, there were trades coming out the top here, but there was no divergence cloud confirmation. The trade of the day really was for the New York Stock Exchange Open. This is a big range though, so you've got to be a big boy or trade the micros with this. Sometimes you get a very tight opening range on the 15-minute, other times you are, it's a big range. And that's sometimes how the indexes work, because we've got to use that 15-minute time frame, especially for these US indexes, purely because that first 15 minutes is very volatile when the market's open, and we need that to settle down, and we need to break out of that volatile first 15-minute range. So this is the New York Stock Exchange Open range. We want to go short, but we want to make sure we're below the EMA cloud here. Then we start to get the divergence cloud confirmation, and then we have a really nice short coming down here. We start to run out of juice, coming back up. Again, this is European evening now, the US afternoon, start to come up, and finally we do close above that EMA cloud. But there's lots of opportunities to take that profit. This rejection doji here on the 15 minutes is a sign that this is running out of juice. You'll see these colors candles. This is something we're working on right now, and this is volume behavior, and talks about accumulation and distribution volume, but this will be released soon as well, which helps you understand what's going off with this. I mean, this opening range for the New York here rejected those highs on high volume. That's a distribution candle because that's red, and that's actually more volume than this previous candle, but I'm going to make a separate video on this particular subject. But again, I wanted to go through the gold futures, or metals, currency futures, and the index futures on this opening range strategy, because it's really great. But it's not just that opening range, it's also getting that divergence cloud confirmation. We use this divergence cloud as confirmation in lots of different strategies, whether we're using harmonics, XPRAT, or this opening range trade. This opening range trade really is good. You might get 2 or 3 of these a week on this, and sometimes, like we saw on the gold in the 6E, you just need one really good trade a week to make your week, because it does move. And that opening range, using those time frames, I'll remind you of those time frames again. For the metals, it's 5 minute. For the currencies futures, it's 10 minutes, and for the index futures, it is 15 minutes. And again, don't be afraid of trading that European and the London Stock Exchange opening range play as well, because they are fantastic moves. Hopefully this helps. Lots of videos before on XPRAT, harmonic, Elliott wave. Not made too much on this opening range, but it's a really fantastic strategy to set you up for great trades, 2 or 3 times a week.